Hello guys, today we're going to talk something very interesting. I do have a very interesting stock here because there are some investors just made about 30 to 40% return in just last 1 month, but there are also some investors made a big loss for more than 75% in the last 1.5 years. So there are a lot of investors right now are kind of waiting to know when is going to be the best time to enter or just to accumulate these stocks. Well, I'm talking about the Alibaba stock here. My name is Rain and welcome to the InvestPro. So this is going to be a program for traders to learn to identify opportunities and to trade better in the stock market. Let's begin. Well, before we begin, let's going back to the time when it just started, and I will tell you a bit of the story of this company. Well, we are talking about somewhere around November 2020 when the founder of the company, Jack Ma, has heavily criticized on China financial system, and he was severely punished for that. And I'm not talking about for millions of dollars here, I'm talking about billion of dollars. Well, if you remember, there's one of the potentially largest IPO, the Ant Group IPO, about $36 billion. Well, that IPO was cancelled as a result. And since then, the government started to introduce a regulatory crackdown campaign. And basically the objective of this campaign just to stop any monopoly behavior from those giant company, trying to ensure a fair competition in the business, and it takes opportunity to clear off the data and data securities and any infringements to user profile privacy. And since then, the company like Alibaba and friends, the valuation has been depressed and it keeps going down for more than 75%. So this is at a price level where I would say it's a making or the breaking points for a lot of investors, because a lot of them kind of considering, should I offload all the positions that I have, or I need to start buying back or accumulate the stocks? Well, to answer those golden questions, so we want to understand a bit more about what does the business do. Well, for Alibaba, we know it's a giant, it's a leaders in its market shares. We're talking about a commerce business. So Alibaba is Amazon in China, and its commerce business made up the 70% of its total revenue, and the rest was made up by the smaller businesses like the logistics service, cloud service, digital media, and some small entertainments. But those smaller businesses are not profitable yet. So far, only those commerce business stays profitable and it supports the rest of the businesses here. But despite some businesses, the smaller one is not yet profitable, but the company would like to keep them because they see and believing in the future growth. And they also see that some business like the logistics service is going to synergize and value add the current commerce business, which I'm going to talk a little bit more detail later on. Well, now let's take a look on its financial statement. I'm not going to talk all the numbers here, but I'm going to select some of important and interesting one to many investors, like net income. And I'm not going to tell you whether it's bad or good numbers because financial statement is always subjective. Now, let's take a look on the last fiscal year 2022. The net income is $9.8 billion. And if you compare the net income with the previous 2 years here, then you realize the net income has dropped by half. But don't worry, it doesn't mean your actual profitable cash really has dropped by half. And I would say a lot of people have wrong contextual interpretation here. And let me explain to you why. Well, in the financial statement, there are some cash, I would say non-cash expenses, things like depreciation, amortizations, or some write-off from certain rights, which will be counted, reckoned as the expenses, so it's going to reduce your net income. But in reality, it doesn't require you any dollar to spend, so there is no real cash dollar spending here, so it will not take up your real profitable cash. That's the reason why many investors love to see more on the free cash flow instead. Well, in this graph there are two charts. One is the net income represented in the blue colors, and the green color represents the free cash flow. Well, over here, this portion, and you realize that the free cash flow can be lower than your net income. And over here, you realize that free cash flow can be higher than the net income. But this free cash flow, the positive gradient, it shows that the free cash flow is very positive. It means that company has been generating a positive free cash flow consistently higher every year. So this is very healthy. Well, free cash flow is very important because it shows you the extra money that the company has. So free cash flow has taken into a consideration of the cash outflow that has supported the operations and capital expenditure. So this is really extra money that the company can utilize for anything they want. That's the reason why some companies use the free cash flow to pay the shareholders in terms of the dividends. And as of the company like Alibaba, which they never pay dividends, then they can use the money to accelerate the growth and bring value more to the company. Well, free cash flow can be utilized to increase the EPS as well, the earning per share, and this is very important because that's going to evaluate the quality of your shares, which I'm going to talk about it shortly. And some also are using the free cash flow to pay off its debt. Now, talking about debt currently is going to be very sensitive because we know that we are staying in the era of inflation. So chances is we have to increase the interest rate to tame down the inflations. So debt is very important. And let's take a look about how the company is dealing with debt and relative to its asset ratio. Now, based on the last quarter of fiscal year 2022, we have the total liabilities of $98 $98 billion and the total asset of $267 billion. Well, to derive the debt to asset ratio, it's very simple. We just need to divide its liabilities over the total asset of $267 billion, so which will we get about 0.36. So this number is very healthy and it is absolutely low. Well, why I would tell you that this number is healthy? Because that simply tells you the asset has been financed 64% by its equity. So it's very healthy, and only about 36% of its asset being financed by the debt. And one more interesting thing that you want to look at here. So historically, when you track its liabilities and you divide the liabilities by its asset, then you realize that the debt to asset ratio ranges from, I think, around 0.3 something. It means that historically, Alibaba has a very low debt, or utilizing very low debt to generate its asset, maybe due to the nature of the business. Therefore, how you're going to interpret this information is that moving forward, or in the future, at least 2 to 3 years from today, you will not expect ballooning in debt in relative to its asset because, well, the nature of its business. Now take a look at its current ratio. Well, this number is also important because it tells you about how much liquid asset the company has to pay its current liabilities or its short-term debt. Now, to derive the current ratio is simple. You only need to define the current asset by its current liabilities. So as per last quarter of fiscal year 2022, the current asset was about $105 billion. And when you divide it by the current liabilities of $64 billion, then you will get your ratio of 1.64. Now, as long the ratio stays in between 1.5 to 2, then I would say it's a good number. It's a healthy ratio. The higher of the number is going to be better because it tells you that you have more liquid asset to pay its current debt. Well, judging from its current ratio and its debt to asset ratio, both have a very good and healthy ratio number. So it tells you that the company has no issue with debt and the debt is perfectly under control. Now, another thing that you want to consider is about how the price fluctuates throughout the history, throughout the years, in relative to the price to book value. Now, in this graph, I have two charts. The blue color represents the market cap, and the green color represents the price to book value. And for your information, that the lower the price to book value is going to be more attractive for the investors because, well, investors do not want to buy overpriced assets. Now, I just want to draw your attention here at this portion. Before the regulatory crackdown campaign introduced, that the price or the market cap, I would say, has been steadily increasing back then, and surprisingly the price to book value declined. Well, it's a good thing, all right, because to make your price to book value lower means that your price has to drop or the book value has to increase. And since you know that the market cap or the market price keep increasing back then, so the only way to explain is that your book value increases faster than the increase of the price. So that is the reason why I would say the company working very efficient, and that's also probably why a lot of investors attracted to this stock so much and keep to push the price up higher to the peak about $300 back then. Now, afterwards, since the regulatory crackdown introduced, then the market cap or the price of the stock keep declining, and so is the price to book value here. It's getting lower and lower and very close to 1. And by the way, to tell you when the price to book value is equal to 1 means that the price is equal to the book value. But in general, I would say that almost hard, or there is no investors are willing to sell you an asset or a stock at the book value unless if the company is not profitable. But for the case of Alibaba, we've learned that this company has been generating a steady, a consistent, positive cash flow every year. So this might be one indicator if the stock is indeed really undervalued. Well, another important indicator that you probably would like to look at is the EPS, or we call it earning per share. Well, this indicator tells you about the quality of how much earning a single share produces every year. Well, when you look at this graph, it's the positive gradient. EPS is very, very healthy because it tells you that the share has been generating higher and higher earnings every year. Well, to get such a healthy EPS, there are two things can be done. One, if your shares generate higher earnings every year, or second is by having less outstanding shares available in the market. So therefore, the idea of having a strong cash flow is very important here, because with the strong free cash flow, you can do a share buyback, means that you can reduce the outstanding shares in the market, so you can push the EPS up and higher. So this is how the price has been fluctuating since the regulatory crackdown campaign introduced in relative to the major indices like S&P 500. So when you draw the trend line, it's very obvious that the stock has been in the downtrend. And I would like to bring your attention towards the end of the tunnel here, because there is a strong breakout that has just crossed over the resistance level here. And I would say that this is the light of hope for many investors, because they really hope that this is the new trend reversals, so they can start to buy, or they can start to accumulate more of these stocks. So here is in the mind of every investors today. Well, is Alibaba a good stock to buy, or we rather wait till the next earning report somewhere around August? And also that we learned the last quarterly report was not that well, but the recent accelerated buyback is so bullish. So is this new trend reversal will continue, or it's just a temporary rebound? So for investors, is this a lifetime opportunity or is just another trap for investors? Well, before you start to buy or you start to accumulate stocks, I would say there are some factors that you really want to consider. Well, first, somewhere around March 16th, the top officials from Beijing started to show some commitments and unveil specific measures to support healthy and normal development of platform economy. So the top officials started discussions with American regulators about logistics of allowing on-site audit inspections for those Chinese stocks listed in New York. And somehow the US counterparts, they can compromise with this, and the Chinese government relax restrictions on the foreign audit. Therefore, you observe that those Alibaba and the friends together shows a sign of rebound. So this is, or I would say this shows one consistency of a positive change towards these companies. Well, another thing that you need to understand today, some investors, I would say hedge funds or portfolio managers, start to accumulate these stocks. So it creates a new strong support at the current price level. Now, when you look at the chart, I would say fortunately or unfortunately, the recent crash happening to many major indices might be a blessing in disguise to some investors. Well, that's because these investors might have witness or see the strong rally coming from the stock in the past months, despite a heavy selling pressure in the markets. So this incident will give a confidence to the investors, and as investors, you start to see, you start to recognize, and you start to appreciate the real value coming from the stock. Well, I would say there are still many investors believing in the growth of the company. So just like JD.com, Alibaba believes that logistics service is going to be part of the commerce business. So they believe that this logistics service is going to synergize, is going to value add the commerce business, and therefore they do not rely on a third-party logistics service provider, but they rather develop on their own. So they have developed these self-driving delivery package robots that can help them to distribute the package in the smaller community, like a housing estate or campuses. So this robot has a name. The name is Xiaomanli, which can carry about 50 packages each time, and it covers about 100 kilometers on a single charge. So in a day, it can deliver about 500 boxes. Well, since launch till around end of March 2022, it's reported by the Alibaba that the robot has delivered over more than 10 million packages. So with this success, Alibaba accelerate the development by developing driverless truck that can help them to solve more complex logistic problems, which requiring them to drive through the public road or on the highway. Now, this development indeed will help the company to reduce the cost, and it will promote the growth of the company. Now, let's analyze the chart so we can get more information about the stock. Now let's have a look at this Alibaba stock. Now to have an overview, let's switch it to a weekly chart. And over here we do have three strong support resistance lines. And it's kind of obvious before the November 2020, the stock was uptrending. And only when the regulations was introduced, then the stock started to plunge. It plunged down, and when you draw this trend line, it's very obvious that it's a strong downtrending here. And only recently, around somewhere March 2022, when the government relaxed the regulations, seems the stock about to regain the momentum and it's rebound at this price level. Now let's switch it back to a daily chart for us to analyze further. Now, for this downtrend, it's kind of obvious that the recent support level is at this line, So I would say around $90 to $80 price level, and then the stock started to climb back and try to break these resistance lines at 105 price level. So right now the stock seems about to form a new trend. Well, judging from the longer historical trend line, it seems that this probably is going to be the next resistance line for the stock. It is somewhere around 126 price level, and this line is going to be the new support level, which is around $99 price level. And a lot of investors would like to know what is the chance that the stock will climb up, cross over this line, and test these next resistance lines. Well, to answer that question, we can use the RSI, the Relative Strength Index. And this is a 80 and 20 lines. Above 80 means that it's overbought, and below 20 means it's oversold. And when you analyze the momentum here at this level, it is still a distance away from 80 line, meaning to say that at this current level is not yet overbought. So with that, I can analyze that at this current price level right now, somewhere around $122, the stock is not yet overbought. So there is a chance that the stock will cross over this line and test the next resistance line at this level, somewhere around, I would say, $165 price level. Now, there is some concern for investors asking about what is the chance that the stock will drop and join the previous downtrend. Well, I would say everything in the market is possible, but it is quite unlikely for this case because of these three reasons. Well, first one is that for this stock to go down and join back this downtrend means that there must be a big gap down, or there's an extreme collapse within the next 7 days, which, judging from the current fundamental and sentiment, I would say that it is pretty unlikely. And then second, when you try to analyze with MACD, well, I do have one interesting findings here. Well, apparently there's a bullish divergence here, which you know that divergence only appear when there's a change of trends. So with this analysis, you might expect that it's forming a new trend, a new bullish trends. And thirdly, that when you try to see these breakouts, comparing it with the previous false breakout here, the price has rallied up, and to make this price move away from the resistance line, it needs a big drive to move away from this resistance line. So I would say that with big confidence that chances it will form a new bullish trend over here. So the next question probably about when should I buy? Well, for me, I use a system which leverage on the COM. Now, this is going to be pretty simple and very, very tidy. So with the COM indicator, I only need to focus on two colors, blue and red, to differentiate between positive momentum and negative momentum. So you want to buy when the momentum is positive, and you want to sell when the momentum is negative. So during the downtrend like this, you only want to focus on the red color to make the entry to short sell, and the blue color to exit or to buy back. So in this example, you only need to short and cover back, you short, you cover back, you short, you cover back, you short, you cover back, you short, then you cover back. And lastly, you short here, then you cover back over here. Now, since there is a change of trend, so if you draw the support line like this, which it shows you a new bullish trends, then you only need to focus on the blue color to enter or to buy, and red color to exit or to sell. So officially, if you follow my system, then you will focus at this price level, somewhere around the $110 price level, and it happens on the 23rd of June to make the entry or to buy. Then what you expect moving forward is that the color will keep switching between blue and red, which red tells me an opportunity to sell, and when it turns to blue means to tell me the opportunity to buy back again. Today the price is about $120 price level, and if you ask that has the price been too high, then I would say that based on the previous analysis, and since it is just forming a new trend, so I would say that there are still a lot more rooms to grow. But the only thing that you want to remember is that it will not go in the straight line up like this, but it's going to wave up and down. That is why by following my system to do a repeated buy and sell, chances it will further optimize the return. And by the way, if you want to know more about how the system works and how the system can analyze the price fluctuations, and you want to know about how to make the right entry and exit to optimize the return, then you can check out our link in the description below. And one last thing before you create your trade plan. Well, previously there were once rumors that Jack Ma went missing or detained by the China government and he's not allowed to leave the country. And there were many speculation about why he was so quiet, to the point that people were concerned about his safety. And just in case if you are, then I just would like to tell you, just be relaxed, because we spot him on the Spanish island playing golf happily with his $200 million yacht. So I just would like to tell you he's fine and he's okay. So hopefully this information will reduce specific risks that you might have as investors. Well, I would say that that's all I have, and hopefully that this will benefit you, and if it does, you can like and you can subscribe this channel, because subscribing it is free and you will never again miss out any good opportunities from the stock market. So thank you once again for watching, and see you around.